Good afternoon, everybody, and thank you for joining. Thank you for joining on time. It's 3 minutes past 12, and I see more people joining. Wonderful. If you have a friend of a friend of a friend that you know will benefit from this session, please invite them, send them the link, and let them join. Thank you again for coming in on time. My name is Yemisi Tony Akinola, and I will be I will be anchoring you through this process. You already know that we have a guest speaker, an expert, somebody who is qualified to guide us through the journey of women's wealth. It's 28th of the month, so it's still Women's Month. So let me say Happy Women's Month and Happy International Women's Day in arrears. This year, we've been accelerating action from the beginning of March, and I think that we still have 3 more days to go to continue to accelerate action. So thank you everyone for joining. Please invite your friends, invite more and more and more people, send them the links so that they can join and benefit from this session. AXA Mansard Investments Limited is very excited to have you on board. So thank you once again for joining. So Yinka, please confirm if you can see my screen.
Hi. I can hear you. Okay, I can see your screen now.
Okay, thank you so much. Like I said before, we have an amazing guest. You have no idea what that lady is capable of. She's already on the call and she's going to take us through a very wonderful journey that will make building wealth, especially for women, very clear to us. So thank you so much for joining. So we'll just go through a few ground rules to start with. Please, it's very important that your internet is on point today because there's so much that we're going to be learning so that you don't miss anything. Make sure you have very, very good internet. Cameras, microphones, please keep them off during the presentations. There'll be a Q&A session, so don't panic. You will have time to ask your questions from today's speakers, both the guest speaker and the expert from AXA Mansard Investments as well. They'll be here to take you through your questions, to respond to your comments, so don't panic. In the meantime, you can use the chat session to drop your comments and questions, and they will be answered at the end of the session. So let us have a great time today. Once again, thank you very much for joining. Today, we're taking the topic Women's Wealth, how to start from where you are. And taking us through this journey is Ibi Ibru, a financial advisor. She's also certified to teach people on personal finance. She's on a mission to help people develop intentional wealth building. She's the CEO of Money Start and she's the lead financial advisor there. She helps her clients to start investing, to help them manage their money better. Also, she helps them to increase their overall income. She has a BSc from the neuroscience, interested in neuroscience from King's College London, and a master's degree in management from the Imperial College Business School, also in London. She has 10 years of work experience in the corporate world as a product specialist at Paystack, corporate finance and strategy and business transformation at AXA Mansard Insurance. Ladies, please welcome Ibi Ibru. Ibi, are you on the call, please?
Hi, let me see. I'm on the call. Thank you for the great introduction. And hello, everybody. I'm happy to be here.
All right, please take it away, Binka.
Okay. I'm going to ask if you could stop sharing your screen so that I could share the lovely presentation that I have.
Fantastic. Have stopped sharing now. Please go ahead.
Okay. All right, great. 1 second. Let me just get everything ready. Motion of screen. Okay. Oh. Okay, I believe everybody can see my screen now.
Yes, we
Okay.
can see your screen.
Awesome. So, hello everybody. I'm very excited to be here. Thank you for the team at AXA Mansard for having me. As you have heard, I actually used to work at AXA Mansard, so I'm a huge fan. And I'm very, very happy to be back here in this capacity. So today's workshop is about, starting where you are. So if you're feeling nervous, please don't be. Take a deep breath. It's going to be very fun. It's going to be beginner friendly. So before we get started, I want to thank everybody for showing up today. Well done. You're here, so you're committed to taking control of your financial future, and that's really, really powerful. So you're doing a good job. Okay. So I want you to tell me in the chat. I don't know if people have, access to write in the chats, but if you are related to or you relate to any of these statements, you can just write me to. If you don't have access in the chat, you can just say it to yourself. But have you ever thought, okay, I need a lot of money before I start investing? There's no point starting with just this small amount I have. Or I'm scared of losing all my money if the stock market crashes or if I make a mistake on a bad investment. Or maybe you've thought that, okay, investing is the thing that's going to make me rich quick. Once I start investing, I will just blow, I'll quit my job. Or maybe I'll invest when I'm older. Don't really see the point or the relevance of any of that stuff right now. Okay, so okay, so if you've ever thought any of these things or you still think that doesn't have to be the case. My goal for this webinar is, first of all, to show you how to plan and diversify your savings based on your different earnings and stages of your life. Then the next thing we're going to do is help you determine how much you can actually invest, because that's a question I get a lot from my clients. Like, okay, how much should I start investing with? The next thing we're going to do is understand which kinds of investments exactly are the best for people who are starting with limited cash. So you don't have a whole bunch of resources, but you want to build a good portfolio. And then, of course, I'll cover my number one strategy to build wealth and an income generating portfolio. But before I go on, I feel like this is a bit small in terms of seeing the screen. Okay, is this better? Can everybody see the screen a bit better now?
Yeah, I think it's better. It's big.
It's
It's
big.
okay. Mm-hmm.
Okay. Sorry, I'm very conscious of it being too small. I want everybody to be able to see and follow along. Okay, so for anybody who doesn't know, Yemisi gave a very, very wonderful introduction to me. But Money Starts is the business I run. It's a financial award-winning financial education and coaching platform, my financial advisory business. And we've helped over 1,000 clients start investing, manage their money better, and increase their overall income. So yeah, we've worked with thousands of women, especially just like you, and we've helped them start investing, grow their portfolios from nothing to thousands of dollars. So we can definitely help you too. So let's dive deeper into it. So the first thing we're going to talk about is how to plan and diversify your savings as your life evolves. Because every time you move from a different life stage, you have different needs. And our financial needs and priorities change with every season of our life. And that strategy should change along with us, okay? So why is this important? As women especially, we experience more life transitions, that directly impact our finances. So whether it's you taking a career break, relocating for a husband or a partner, or you're raising children, you're having children, you need to plan ahead and diversify your savings so that you can have peace of mind and the power to make your decisions confidently, no matter what life throws at you or where you find yourself. So a good saving strategy should have a mix of three things. You need to have your short-term savings. That needs to be clear to you. So what you need to save for that's coming up in the next 1 or 2 years. So definitely an emergency fund. That's number one. Your rent or any travel. Then midterm savings. So maybe starting a business, buying a property if you are relocating, because that seems to be a big point for a lot of people. And then, of course, long-term savings. So your retirement, education, and just generational wealth. So this mix ensures that you're not saving blindly. You need to save with purpose. It's a mistake a lot of people make. Okay, they're just like, okay, I have savings. What are you saving for? If you save just for the sake of savings, it's very likely that your savings won't last. And you find yourself in that cycle where you save, you spend the savings on something, you save, you spend the savings on something, and it seems like you're going nowhere fast. You're just going round and round. So let's start with being single, or like if you're single in singlehood, this is actually the season with the most financial freedom. I'm speaking from experience. It's a good thing. This is a good time to build a strong financial foundation. So the first thing you want to do is start with your emergency fund. And your emergency fund is when you have 3 to 6 months of your expenses, not your salary. Okay, so not your salary. So for example, if you make 500K in a month, but you only spend 300K in a month, you're looking at that expenses, that 300K. You need to have that ×3 or ×6 in an emergency fund. Okay. And then once you've built your emergency fund, you can start investing, because compound interest is like magic when you start early. So please start early. So start investing early. Let time do the heavy lifting. You don't want to wait until you are overwhelmed with responsibilities before you start investing. In this stage of your life, save for your lifestyle goals. So like your travel, career development is very important, because as you develop yourself in your career, the more your earning and income can be. And then of course, the more you can invest. So it's a domino effect. And then automate your savings. I can't speak for everybody, but when you are single, you have less, I would say, on surprising expenses that just come up. So automating your savings is usually a bit easier. Please, nobody should come for me for making generalizations, so please. So next thing, when you're in a relationship. Now, my disclaimer here is that there are levels to relationship. I'm not talking about your boyfriend of last week or your boyfriend of last month, but when it's a relationship that's serious and you're talking about long-term partnership. So you want to start having honest conversations about money. I would say this is when your conversations about money really start to matter. So set regular money dates, align with your goals, your spending habits, and your expectations. Aligning doesn't mean you both have to agree, which is also another common, I think, misconception. You don't have to exactly always be on the same page, but you need to just be able to, when I say align, be like, okay, this is how this person does things. This is how I do things. This is where we can meet in the middle, or this is how we can balance it out. Because chances are you're two different people, two different backgrounds, you grew up in different homes, everything can be exactly the same, but you need to know where the other person stands and if it's something that you are okay with. I would say keep personal savings for sure, but also build joint ones. So if you're in a serious relationship and you have goals that you are saving towards, you can have a joint account. And then you can save for shared plans as well. So things like your travel, your rents, or your wedding, depending on how your relationship is set up. Okay, so marriage. So marriage brings even more shared responsibility. So it's very important to review your financial goals as a team. The number one reason that divorces happen is actually money issues. It's not fidelity, it's actually money. Money is the thing that breaks up the most marriages. So it's so important. So you're now likely be saving for bigger things, maybe buying a house, planning for children, managing joint expenses. All that person's wahala has now become your own wahala. So, maybe their parents or, anything. So, you're combining forces, but I would say that you want to, at this point, maintain individual savings for your personal needs. So I'm all for having a joint account, but I think it's very important that, in a relationship, even in a marriage, you should have separate accounts as well. Just for saving your own savings, your hobbies, or any unexpected changes. Yeah. Having everything in a joint account is a recipe for disaster. People like, making an argument for it, but it's actually a recipe for disaster. Have money in a joint account. You have your own account, you should have his own account. And everybody should just agree what's going in the joint account. But again, I know that there are marriages where, people have like more of a 50-50 split, or maybe the woman is contributing less, or maybe the woman is contributing more, or all. Whatever it is that you had agreed before you got married or as you get married, stick to that, but make sure you have ours, the marriage, and then you have yours and he has his. Very important. Okay, parenting, completely different ball game. So I have 2 kids, so I know. So parenting definitely changes your whole financial world, because you're suddenly thinking about school fees, childcare, insurance, all those random middle of the night rush to the emergency room. Shout out AXA Mansard Health Insurance. So, start saving for your children's education early. Don't wait until they're in primary 6 and you're getting hit with gigantic secondary school bills. You can start from as soon as they are born. Expand your emergency fund. So before, whereas your emergency fund was 3 months to 6 months, now you should really have an emergency fund of about 6 to 9 months. So if you lose your job or something happens, you are not stuck, because there's that somebody is depending on you for their whole entire life. Get solid insurance. I'm actually not just writing it because it's an insurance company. It is true. You need to get solid insurance. health insurance, life insurance, motor insurance, get all the insurance. And then you need to balance also your family needs, your personal goals. I feel like as women, this is where we usually drop the ball because we're so used to thinking about everybody but ourselves. So you save for your children, you put money aside for your house, and then at the end of the day, you don't have any money in retirement for yourself. You don't have anything like investments. So, you have your family needs and everything, and we're very good at that. But don't forget yourself in that process. Don't have the mindset of, oh, when I grow old, my children will take care of me. It is not right. If they can, it's nice. But make sure that you're also thinking about yourself the same way you're thinking about your children and thinking about your family. Okay. So just to recap this first part, I know I'm going a bit fast because there's quite a bit to cover, but like, Yemisi said, there's a Q&A at the end. So anything you want me to dig deeper on, I will. So as your income grows and your life changes, your strategy needs to evolve. The same strategy you had when you were a graduate trainee cannot be your same strategy when you're a senior manager. You need to think in terms of short, mid, and long-term goals. Adjust your savings percentage as you earn more. And more importantly, make sure that every naira that comes into your account, you need to give it a job. When you have money in your account that doesn't have a plan, the money will surely disappear. So I have a 6-step saving strategy that I get all my clients to do, and I hope that you all adopt. So the first thing is to build an emergency fund. That's number 1. Number 2 is to make sure that in your budget, always have a portion for savings. A percentage of your income always needs to go to savings, which I believe everybody knows. Number 3, of that savings, you should spend some of that money on something that makes you happy, on yourself. Okay, so saving is not suffering. As long as you are saving for something, saving for what you want responsibly, you can actually spend money on yourself. Just include it in your plan. Number 4, like I said, give your savings a purpose, set goals to them, set dates to them. Don't just have an account with a few million naira, just, okay, savings. Savings for what? Savings for when? How does it tie into your long-term goals and your short-term goals? Start thinking about it strategically. Don't just save because, you're educated and you just know that you should save, but you don't really know why you're saving. Number 5 is that your savings don't necessarily need to go into a savings account. I'm sure that we'll hear from Olayinka AXA investments soon, but you can put your savings into like a fixed deposit so that you can earn more money. Doesn't need to sit inside your GT account where they'll just be charging you and debiting you. And then the last thing, I was going to say no shade to GT Bank, but major shade to GT Bank. Number 6, change your mindset. Saving is just you paying your future self. You are not depriving yourself. It's not punishment, okay? You're doing it for you. So we're going to move on to the second thing I said I was going to talk about today, which is how to determine how much exactly you should invest. Because, I'm going to assume most people here are salary earners. Maybe you own a business, and people always wonder, like, how do I figure out how much money I can invest or not? So a lot of people think that you need a lot of money. So like when you get a big lump sum, then you start investing because the small money that you have every month won't make a difference. So you just feel a bit, silly. Like, why am I bothering investing 70K, 50K, 100K, 10K? And the secret is small, consistent investments grow over time, and they set you on the path to building a sustainable wealth-generating portfolio. The key to investing is more time in the market is better than having more money in the market, okay? So you want to make sure that you're giving yourself as much time as possible. Little jobs really make an ocean. I'm going to give you, I'm going to just tell you the truth. It's actually better to start your investment journey with smaller amounts and make any mistakes you're going to make now, rather than starting with bigger amounts when you're trying to still figure everything out and you're going through like maybe your first down cycle in the markets, and then you sell at a loss, and then you're getting everything messed up. So I'll tell you a story about myself. So I'm generally impatient, right? So when I was a bit earlier in my career, I was like, okay, no point investing, this small money. Let me just wait until I get a big bonus, then I'll start. So I got paid my first lump sum of money. I was so excited. I was really happy. I had all the plans of all the different investments I was going to make. I've been hearing people talk about these investments. So I felt like I knew what I was doing, even though I had never invested before. I didn't have a financial advisor. I didn't have a coach. I didn't have anything like that. So I went into it completely blind. They weren't a thing, 10 years ago. And basically, I made a mistake. I made a $5,000 mistake, and it was completely avoidable, totally avoidable. I jumped in head first. I had no experience. I didn't work with any professionals, and I lost all that money. So I would say that if I had started investing with my smaller money before, those are maybe mistakes I would have made, or 50,000 naira, I would have learned and I would have gotten better. So I would say definitely don't be like me. You know, don't wait until you have, you know, a giant amount of money and say you want to start learning to invest with that. Don't do it. Okay, so how do we figure out how much you should invest? So let's just assume this person, her name is, let's call her Steph, and her monthly income is 500,000 naira. So her expenses and wants, so you know, expenses being the things that she needs to pay for every month. So things like your rent, food, transport, utility. And then when I say wants, because just being realistic here, you spend money on things that you want. So people don't only spend on their expenses. You spend money, or maybe you go out with your friends, you go and buy suya, you buy a dress, I don't know, you do your hair, something, or you buy a wig that you didn't need to buy. I'm not throwing shit at anybody. I'm just saying your expenses are your wants. So let's say that's 65% of her salary. So that's 325K. Then every month, automatically, she saves 20% of her salary. That's 100K. So the amount she has left over for investing is now 75,000 naira. So technically, this 75,000 naira is 15% of her overall monthly income. And I know it can sound small, but remember that investments will grow over time. Your investments also need to have time to grow. So let me say that again. Your investments will grow over time, and your investments need time to grow. So on the first side of that, your investments will grow over time. Since they are growing over time, they don't need to start big. They can start small and continue to grow as you continue to add. That's number one. Number two, your investments need time to grow. So if you put in half of your salary into investments because you want to be aggressive, and then come next month, something happened to your car, a pipe has burst in your house, you're now running, you're calling AXA Mansard Insurance and they should liquidate your mutual funds because you need to go and pay your bills, and you're not seeing any of the returns or interest, you know. So you need to make sure that it's not an amount of money where you're going to need to call on it next week, you know. Okay, so this is a short mathematical calculation that I've done, but there's definitely something missing here. There's something that she hasn't accounted for before she started thinking about the money she wanted to put into investing. And that's emergency fund. So right now, she doesn't have an emergency fund. And like I said before, an emergency fund is cash to cover 3 months of your expenses, at least 3 months of your expenses. And I'll tell you why. So, you know, number one, if she starts investing, she doesn't have an emergency fund, and then all of a sudden she has a medical emergency that her insurance doesn't cover, her car breaks down, or she has plumbing issues in her home, she will end up not needing to dip into her existing savings, but also selling her emergencies to pay for some of those expenses, which is what I just mentioned about. So that completely defeats the point of investing. When you start investing, then you have to now run and sell it. Okay, so in spite of your consistency and hard work, you're just going to end up stuck in a loop. And you'll be stuck saving, and then you won't see any returns from your investments. And then you will now be like, okay, this investing thing is not really working for me. Whereas you really haven't gone about it the correct way. So just remember, you need to build your emergency fund first. Once this is done, you can contribute more to your investments. Now, that being said, there are rules that can be bent. You can decide to invest more and save less in a particular month if you see an exciting opportunity, or just save less in general, depending on your own unique situation. And you can also spend less on your expenses and wants so that you can invest more, okay? But these are the rules that cannot be broken. So the first one is that do not take money out of your emergency fund for investments. Your emergency fund is there to keep you safe. Number two is that you're not supposed to be diverting your money for loan repayment. So if you have a loan out, don't divert that loan repayment money to invest, thinking that, okay, the return I get from the investment, I will now pay back the loan. All investments come with risk unless it's a fixed deposit. So you don't want to do that. And the last thing is, and I've seen people really do this, don't deprive yourself of basic needs like food because you want to make investments. Your brain will not be working. So please don't say that you're not eating because you want to invest in crypto. Eat your food. Okay, so the next one we're going to go to is understanding what investments are best to buy, especially for beginners, especially if you have limited cash. Because what we don't want is for you to risk losing your hard-earned money or wasting your time on things that are just not going to work out. So these are the recommended investments, okay, according to Mansard. This is the framework that we've come up with for our clients. So the first is dividend-paying stocks, real estate, specifically real estate investment trusts, bonds, and exchange-traded funds, okay? So what does that even mean? I'm sure that some people are wondering. So what does that even mean? How do they work? What do they do? Don't worry, I'm going to tell you. That's why I'm here. So on this slide, I have listed out the major types of investment asset class. This is not an exhaustive list, but these are the major types of categories from the least risky to the most risky. Least risky being a fixed deposit, the most risky being things like cryptocurrencies, NFTs, and alternative investments. I'm not going to go into all the investment asset classes in detail. We don't have time for that. Instead, we're going to just focus on the 4 that I recommended for people who have limited cash. So the first thing that you will notice of the 4 that I circled in red, right? They fall within the range of low to medium risk. And this is because you have limited cash. We don't want you to run the risk of losing most or all of your money with high risk investments, even though they might yield you more, okay? The next thing is that not all investment types are created equal, because I know people also struggle with, okay, but where do I start? So if you have limited funds and you can't contribute to everything at the same time, this is how I recommend you start. Number 1 is to start by investing in a fund, an index fund, okay? And this is actually my number 1 tip for avoiding making mistakes when you're investing in the stock markets. Number 1 tip is to invest in a fund, and my number 2 tip is to invest for the long term, a minimum of 5 years, or 4 to 5 years. So a very brief overview of what it means when you invest in a fund, right? Because again, time conscious, I don't want MSC to kick me off. Imagine you buy, like you have 100,000 naira and you buy 100,000 naira of just Amazon stock. Or scenario B, where you have 100,000 naira and you buy a fund. So you buy 100,000 naira of a fund that has Amazon stock and a whole bunch of other stocks inside it, okay? So this fund is like a basket, and that basket has a whole bunch of different stocks inside. So let's say the year is now 2040, and for some reason, Amazon has gone down. That would mean that if you did scenario A and you invested all your 100K into Amazon stock, all your money is gone. You went down with Amazon. But if you did scenario B and you invested your 100K in a fund, that means your money is mostly preserved because Amazon was just one stock in that basket of stocks that makes up the fund, okay? So that's why I like funds for beginners investors. I think that they give you the growth, but they also give you the protection and the safety that comes with diversification. Again, if there are more questions on this Q&A, I'll be there for you. Number 2 is bonds, right? So I know that investing in bonds can be very expensive for individual investors, but there are lots of bond funds. So lots of mutual funds actually are made up of bonds, to be honest. So in terms of how a bond works, really quickly, essentially it would just be like, for example, if you have a friend named Ibi who needs to borrow money to start a bakery, so instead of going to the bank, I'll come to you and to ask you for the money, and then I'll be like, okay, I'll give you back your original money plus the interest at regular intervals. So that's just how a bond works. They're very safe. At the beginning of a bond investment, you know exactly how much you're going to get out. You know when your repayments are going to come. You know what your interest is going to be. So then 3rd is property. So, I mean, obviously, I know that you're starting with limited funds. You can't afford to run out and buy a house. So in terms of how I would recommend people invest in property, is to invest in something called real estate investment trusts, which are companies that own income producing real estate. So, you know, like I said, for many investors, buying a physical property it is very expensive, it can be difficult, and it's risky. But instead, you can buy shares of diversified real estate investment trusts, which are public companies that own large portfolios of real estate and they pay dividends, which is fantastic. Lastly, we have stocks. So I think that most people are familiar with stocks. I think that's the thing that comes to most people's head when they think about investing, which is just when you buy a stock or a share of a company, that means you're a part owner of a company. So companies issue stock on the stock market so that they can raise money from people like you and me for their business expansion, research and development, new products, things like that. Investing in stocks makes you money in 2 ways. So the first is capital gains, which is when the stock increases in price and then you sell and you take that profit. And the second is dividend payments. So dividend payments is basically when the company is distributing part of their profits for that period to you for being a part owner as well. So just to recap what I just said, because we went through that really, really quickly. Okay, so the 4 investment asset classes that you should buy if you're an investor with limited funds, especially if you're a beginner. First of all, funds, so index funds. Second of all, bonds. Third of all, property, in terms of real estate investment trust. And then lastly, individual stocks. Okay, so we're almost at the end. My number 1 strategy to grow wealth and an income generating portfolio. Because what I find is that a lot of people want, to start investing, but people also want something that is income generating, something where over time you'll be able to live off of your investments. And that's the dream for most people, right? Where, you don't have to exchange your time for money, and you are literally making money while you sleep. You're able to build wealth exponentially and provide a great life for not just yourself, but your children and your grandchildren or anybody else who you want to. So for anybody who's wondering, okay, what is an income generating portfolio? It's essentially a collection of investments specifically chosen to provide you with regular income, typically through dividends, interest, or rental income. And the primary goal of this is to create consistent cash flow to cover your living expenses mostly, or at least, partially. So income generating portfolio, what goes into it? The good news is I already told you. So the first thing is your dividend paying stocks, your bonds, your real estate investment trusts, and your funds. So exchange traded funds are just another way to say funds or index funds. So now that you know what to do, I find that people come, they take webinars like this, they're very excited and they think that it's very interesting, but still something stops them from, moving forward, taking the next step, actually building that portfolio. And for most people, it's fear. Fear is the reason why lots of people don't get started. So that it's like you have all the knowledge, but that fear is holding you back, right? So what if I lose all my money? That is most people's greatest fear, because you worked hard for the money, you sweat for the money, you don't want to put it in something where, you're feeling like at the end of the year, you don't want to have regrets. So I just wanted to let you know this, that for example, the S&P 500, which is an index that tracks the stock market, it's fallen by 20%, which is technically a crash, 12 times since 1983. So that includes the market crash of 2008 and COVID. But if you had put $1,000 into the S&P 500 way back in 1983, right, and you just left it, you didn't add any money to it, and it would have crashed by 12 times, you would still have $26,000 invested right now. So that just takes me to my next point, which is that, the stock market has never not recovered. I said the US stock market, same is actually true for the Nigerian stock market as well. It has never not recovered. So if you're worried about losing your money, aside from the fact that, picking the right investments, not picking those investments that are high risk, which most people in our environment tend to do. You tend to invest by giving somebody money to start a business. That's like angel investing or VC. It's extremely risky. Or you want to go for something where they're telling you that, okay, bring this money in 3 months, I'll give you back double. If it sounds too good to be true, it probably is. So on this making smart choices, right? My investing rules 101, how to avoid losing money. First of all, make sure what you're investing with aligns with your goals, okay? Make sure you're asking yourself, or you're asking whoever is bringing the investment to you, is it high risk? Is it low risk? Is it medium risk? What are all the risks that are here? Second of all, I want you to understand that the bigger the potential returns, the higher the level of risk. If anybody is coming to you and telling you that, okay, give me this money now, in 3 months, I'll double your money, but don't worry, there's no problem, there are no risks, that person is lying. If you have a potential for high returns, there's usually high risk involved. Number 3, don't put all your eggs into one basket. Spread your money across different asset classes and across different geographies, so you're not too reliant on one place or one investment. Number 4 is to have a long-term mentality. So for example, now the stock market has been down, or I'm talking about the global stock market, the US stock market. It's been down for the last few weeks. So if you're somebody with a short-term mentality, chances are you'll be panicking, you want to sell your investments, you'll probably come out at a loss. Investing is when you put your money towards something with the expectation of a return over time. Don't forget about that over time part. Give it time. Number 5, like I said, if it's too good to be true, it probably will be. And my last rule, the most important, is if you don't understand, don't invest. Don't make anybody make you feel like you're too stupid, or it's because you didn't study finance, that's why you don't understand. Really, at the heart of it, all these financial concepts are things that can be explained to a 5-year-old in terms of how the assets behave and their characteristics. So if somebody cannot explain it to you, don't invest. And lastly, I would say use professionals. You don't have to know everything. You don't need to become an expert in analyzing stocks or real estate markets. Use and leverage professionals, and just make sure that you're asking them the right questions. So I'm wrapping up now. I have, I think, 2 more minutes. So this was a very short, presentation. I really hope that you enjoyed it and you learned some things. If you want more in-depth or step-by-step strategies, you can work with Money Start. We have a investing masterclass. The QR code is over there if you're interested. And it's a 30-day program for anybody who wants to learn to invest intelligently, so that what they have goes to work for them to build lasting wealth. And then you can also book a money strategy session with me. It's 100% free. So you can book that with me or any of the advisors on the Money Star team. And we will talk you through, your finances, what's going on, how to work with us, and how we can best help you. So yes, that's it.
All right. Thank you, Ibi. Thanks for keeping to time. And that was quite the presentation. I learned quite a few things just being listening to you through the call. So I was hoping we could take Yinka's session or Laika's session. She has a few slides to run us through before we now do like a joint Q&A. So hope you stay on the call. Thank you. Yinka, are you there?
Yes, I am. Good afternoon. Please confirm you can hear me. Clearly. Can you hear me?
We can hear. I can hear you, Yinka. Please put on
Okay.
your video.
Could you enable me to share my screen?
Okay. Please go ahead. I think that has been done.
Good afternoon, everyone. Let me put on my video. And thanks, Ibi. That was a really nice presentation. I also learned took one or two things from there. So to go straight to the key learnings for our presentation. Sorry. I think difficulty moving my slides. Okay. So what are the key things that we must take home today? We noticed statistics has proven that women live longer than men, require more savings for retirement. I think women, we are quite resilient and we are more energetic compared to men. And I'll say that's the way we are wired and maybe the way God has created us. But we must learn to break that barrier and bridge the gap between the earnings from the men's side compared to the women. So I'm going to emphasize more on what we need to do and what are the major challenges we face. And I'll focus more on the four key points that I'm stating here. Number one, longer life expectancy. Like I said earlier, women live longer than men. Statistics have shown it in time past. Looking at the income gap, I just want to say that we shouldn't be discouraged and we should keep the resilience fire burning. For women, there are a lot of things that truncate our movement in life, time of childbirth, you have to stay at home for 3 months. All of that shouldn't keep us from focusing on aiming at being what we want to become in future. And for the career breaks, we must also be intentional about it. That even if I'm on mat leave or anything, or I'm preparing towards that level, I must endeavor, excuse me, to still strive for the best. Although the inflation impact is not so generic to female, it's something that is global. So we must ensure that we edge against the um, um, currency funds in the sense that the 10 naira you have today will not be able to buy what you want to buy in the next 2 days. So it is very important that we must build wealth and achieve financial independence at a lady, just like what Ibi had mentioned earlier, that for the fact that you're married does not mean that, okay, you shouldn't also have your own goals that I want to save towards this particular purpose. We must ensure that it is well defined from inception and it is clear. One of the key things I would like to say here is that you must learn to build your funds, start small and be consistent about it. And you must also learn to diversify, just like what our first speaker had said earlier, a little bit of the money market, which I'm going to share more light in the next slide, a little bit of stocks, a little bit of fixed deposits, dealing with treasury bills and all. So I'll be moving on to the next slide. Please confirm if you can still hear me.
We can hear you.
I can hear you, but your screen though.
You can't see your screen.
You can't see my screen. You can't see my screen?
No, we
No.
can't. We can't.
Oh, okay. I need to stop.
Maybe I should share from you for you from here.
Okay. Let me try for the last time. Don't know why.
Okay, I have your presentation up. Can you see it?
Hold on. Yes, yes, yes. Please move on to yes. I'm done with this. Okay,
Okay.
so that means
It's
you
fine.
didn't see my, those was what I was speaking to at first. So because of our time, I'll move on to understanding money market. So what is the money market fund all about? It's actually a mutual gathering of funds for a short to long term purpose, depending on what you want to save towards. And we've discovered in time past that you keeping your funds in the bank is not a wise thing to really save to keep the funds there for a long period, because you see a lot of charges, ATM fee, maintenance fee, and all of that. But the mutual funds encourages you to earn income on a daily basis. So for AXA Mansard, we have a mutual fund called AXA Mansard Money Market Fund, where we encourage people to say as low as 2,000 naira. And if as of 2 days ago, the return was about 20.3%, which means that you earn 20.3% on that 2,000 naira investment for that particular day. So for instance, if the interest should move like next day to like a 19%, you're going to earn 19% on your accrued on your capital for that particular day. And the beauty about the money market fund that it encourages you to save more. And we have a dashboard where you can actually see how your fund is growing. So you can start small. We build wealth gradually. And I will quickly share someone that I actually onboarded about 5 years ago. I just rushed into him. He gave me a lift and was like, "Oh, where do you want?" I said, "Axaman said, oh, he would like to save his fund." Believe you me, he started saving around, I think, 2 million naira. That fund, as I speak, is almost 60 million as at today. So it takes consistency. It takes someone to probably guide you, have the right set of friends around you that could guide you in the right manner. So money market also speaks to not just the small amount of money. You can also dive into treasury bills. What are treasury bills? These are government issued short-term certificates. So we know that government will always want to need funds to meet up with their expenses. So what they do is that they reach out to the public and we're able to raise funds for them. But the beauty of it is that you're not paying tax on treasury bills. And the minimum amount you can take for into the primary markets are about 100 million. So what we do in AXA, as if you have as low as a 5 million naira, you might say, "Oh, I don't have 5 million naira." But trust me, from the money market account you have created, you can have a goal. Have 2 years goal, 3 year goal that I want to save towards me building my funds to a 5 million naira, which is possible. Like you need to cut down on some of the ones. There are some things that are needed, but there are some ones that are really not necessary. So you need to learn the habit of being disciplined. And with that, you see that you'll be able to build your funds gradually. So moving down to the commercial paper, the commercial paper is just the corporate version of the treasury bills. You know, treasury bills is issued by the federal government, but commercial paper are issued by the corporate body, the likes of Dangote, in the likes of we have Daraju, we have Lafarge. So they can come and say they want to borrow funds from a well-recognized organization like AXA Mansard. So what we do, we reach out because we are a channel, we are just like an intermediary. We get all the necessary information. You see commercial paper as 180 days, 270 days, and they are putting a yield. That yield is the gross rate you're going to earn on that investment. Let's say, and the minimum is always 5 million naira. So what you then we do is to take out the tax because it's corporate. We need to take out the tax fee and take out management fee so that it is well clear from inception that okay, after deducting 2%, what I'm going to go on with is about 20% of my funds. So upon maturity, you get your capital and your interest. We don't just deal with any kind of organization. They must have good credit rating. What impact are they dealing with in the organization, in the economy as a whole? So those are the things that we look at. And we also have professional people that are certified CFA holders that also look in depthly to know which we should invest and the one that is not even good at all for us. So at the end of it, you get a certificate to prove that you have an investment with us. Now, we also have banks. Banks also, we give out funds to banks. We do a fixed deposit with them and some other microfinance that are well known in in the organization and the economy as a whole. So for those fixed deposits, what we are doing is that we are placing this fund for a period of, let's say, 90 days or 180 days and all of that to ascertain that, okay, if I lock up my fund for 90 days, how much am I going to earn? Let's say it's 20%. That 20% is going to be prorated because it's not up to 1 year. So you get a 20% times 90 over 365 times your capital. And with that, you'll be able to know the exact amount you are earning. Now, what are the benefits of money market for women? And is so suitable. In fact, Mansard Money Market run investment as we do liquidations on Saturdays and Sunday. For those of you that might say that, oh, how will I access my fund and all of that? So we are quite very flexible. Liquidation is 24 hours, and you can have access to your funds anytime, any day, although there are cut-off time for that. That is about 3 p.m. Now, when you see your funds growing, you'll be excited, and that will give you the move to even want to save more, save towards your child's education, save towards your vacation. And who should invest in money markets? Trust me, excuse me, as low as looking at the age factor, you can even have your children even cultivate the habit of saving from the funds they are taking to school, especially maybe those in the boarding house. But as a lady, we must have something that we are saving towards. Like Ibi has said earlier, saving towards your rent, saving towards your child's school fees, saving towards emergency, saving towards maybe your dream wedding you want to you dream to have. So you can start small. Investors seeking safer and more flexible options than traditional saving. Traditional saving is when you are putting your money in the bank. You hear, oh, because of the experience you've had in time past, I don't want to put my money in MMM. Obviously, people lost a lot of funds during that period, but you can start again and don't be scared. So far, you have all your facts right, and you have the right people advising you accordingly. Next slide, please. So I explained all of this in the slide I shared earlier. So what is fixed income? Putting your funds aside for a particular period of time. Now, there are different types of fixed income. We have the government bonds. So these are government coming to meet us that can you give us a loan, although it requires a huge amount of money, like 30 million, 40 million. Don't say that, oh, it's a huge amount of money. Trust me, a little drop of water makes a mighty ocean, and you will get there someday. People that have 100 million, 50 million, they didn't carry from heaven. They actually do their funds from the scratch. So you too can actually leverage on that bit, like, okay, I will save towards this goal. And when I have a government bond, I can invest 30 million. And the beauty about federal government bond is you don't pay tax. Also, there's a constant coupon payment paid twice a year. So let's say the rate is 18%. You get 80% twice paid to you. That is 9%, 9% of it paid every six months. Let's say that bond is for 10 years. You're going to get 9% of a 30 million for a period of 20 times period in a year. And same goes to the corporate bond. Corporate bond, like I said earlier, is for the corporate organization. Let's say Dangote wants to issue a 30-year bond that is going to be borrowing funds from you and will be paying back every six months. And the beauty of it is that aside the coupon payments, there's also a yield. It's also called interest that we pay to you at the end of that investment. But the risk about is that it depends on the price. So if the price of the bond you are purchasing today is 96 naira and the yield is, let's say, 19%, if the price of that bond keep moving high to from 96 naira to like a 120 naira, the yield upon maturity will go lower because the price and yield, they move in inverse proportion. So if price goes up, the yield will come down. And the beauty about it is that you can actually sell your part of your bond before maturity. So if you are purchased at 96 naira today, and in 2 years' time it has moved to 120 naira, the differential between the 96 and the 120 is what you have earned, just like what we learned earlier, called the capital gain. So you can actually sell part of your portion. So number one, the benefits that there's steady income coming to you on a half-year basis, depending on the product you opt for. You are preserving your wealth. You are also hedging against inflation. There's no volatility. You are in safe hands because federal government cannot go bankrupt. Are you getting me? For so far, they are the one, the currency is domiciled. They are the one printing out the initial currency, not like Nigeria that issued a euro bond that is, and the currency is based in the US. So for the Nigerian one, we cannot run, government will never go bankrupt. So who should invest? Women planning for long-term goals, for home ownership, children's education, retirement. You want to set up a business, you want to retire, you want to own a beauty shop, you want to own a cake shop, you can actually save using that bond opportunity. Then those looking for low-risk investment want to preserve their income. We can actually go into that. I don't want to really speak more to stock because stocks is quite complicated. And if you don't understand it, you will make a lot of loss. So beauty about it is that start small. And we are here in AXA to give you the best advice in growing your funds. Let's say you have 100 million and you want to, and you are aged 35, you can invest, let's say, 5% of your funds in stocks by buying different stocks, just like our first speaker has spoken, a little bit of GTB, a little bit of Dangote, a little bit of MTN, just spread it, buy global stock as well to grow your funds. Okay, next slide, please. Okay, so comparing money market versus fixed income, obviously, money markets, the risk is very low. For fixed income, a little bit moderate, and you have the opportunity to grow within 0 to 2 years for the money markets to grow your funds. But the long-term one, that's the bond, you have period of as many as 3 years, 5 years, and above. And how do you decide? If you need quick access to fund, you can go to our website. Excuse me. Visit our website, www.axamansard.com, and you can always reach out to any one of us, like our co-host Yemisi. You can reach out to myself, and we'll be able to build your portfolio for you and to help you maximize your funds. Next slide, please. So, how to get started? Define your financial goals. What are you saving towards? Let it be explicit. You have a short term, long term. I don't want to bore because we've spoken about it earlier. Assess your risks earlier. Know yourself. Don't say because my friend is going to the investment, I want to go into it. What are you saving towards? And have your own mindset. Don't be manipulated. Choose a reputable fund manager. We have AXA Mansard Investment Limited. We have other people like ARM, but trust me, AXA Mansard is one of the best fund asset management company that are giving the best service to all clients, especially I'll say women because we're in the women's month. Then start small, as low as 5,000 naira. For money markets in AXA, minimum amount is 2K naira. So we have same for dollar bond fund also. You can start as low as $2,000 for those that have dollar to hedge against currency. Monitor and adjust your savings. Whenever you have an increment in salary, you can actually save that portion. That does not mean you incur more cost into your daily routine. So I wish us all the best. I think I have a quote for us. You don't need a lot of money to start investing. You just need to start something now. Thank you very much, everyone. That brings me to the end of my presentation.
Thank you so much, Yinka. I like that was brief, but also very impactful. Thank you so much. All right. So, just a moment. I think we can start the Q&A session in a moment. That was Olayinka Oyeku, the head of PSS distribution and third-party channel at AXA Mansard Investments. Thank you so much for your presentation. So I think we can quickly go into the question and answer. Now, if you have any questions, you can put them in the chat. We have both Ibi, first speaker, and we have the first speaker, Ibi, and we also have Yinka here to take questions. So do we have any questions? I think, let me check the Q&A. Okay, Ibi, I think there's a question here for you. Okay, this person just commented that they couldn't see the slides. We have our speakers here available to answer our questions. You can put the questions in the chat, or I see 2 hands up. Could you please use the Q&A box to drop your questions? Okay. All right. So, all right. I think that there's a question from A. Please go ahead. Your hand is up. You can unmute now. Go ahead and ask your question.
Hello.
Yes, please go ahead. We can hear you now.
You can hear me? Okay, because it looks like you can't see my question. I typed a question in the Q&A, but it seems you can't
Okay.
see it.
No,
My
please go
question
ahead.
was if you can give examples of reliable and trustworthy real estate investments trust vehicles. So what was it? The first speaker said REIS.
Yes. Okay. I think that question is for you, Ibi. She wants you to please examples of real estate investments.
Okay, hi. So
Investment companies.
are you in like in the Nigerian market or other
In the
market?
Nigerian market.
Okay, give me a minute. The last time I looked at that was in January. So I just want to make sure that before I tell you the wrong thing, that is still good, because I really don't like recommending investments when there's like a large group of people. So I would say like I will give me a minute. Let me just double check. But then my disclaimer is that you're investing at your own risk because we haven't had a consultation. But just give me 1 minute. 1 minute.
Fine.
But we can take another question in the meantime.
Okay, I think there's a question for you, Yinka from Tolu. She says, I have MMF for my kids with AXA. How do I move them to fixed income investments?
Okay. Can you hear me?
Yes, please go ahead.
Thank you. So you can actually move the funds if they meet up with a particular threshold that you can embark upon to do a fixed deposit. For some of our counterparts, the minimum is about 5 million naira, which is on 20.63. But we were of the opinion to some client that money market rate was a little bit much better than that. But if you want to just looking for a particular fixed period of time, if they meet up with that particular threshold of 5 million naira, we then can move them into the fixed deposit space. I hope I've answered your question.
Okay. Yeah, I believe so. I don't know if she's there.
Hi, Tolu. Please confirm you are okay with my answers.
Okay, we have a message from Patience Giwa. Okay, she says, thank you to the speakers, very insightful. How do I invest with AXA Mansard? Inka, I think that question is for you as well.
Thank you. I don't know if they can drop my number on the chat, but AXA that you can actually visit our website, www.axamansard.com. Once you go to the site, you see insurance, investment, and health. Once you click on investment, you click on buy funds. You get kick started off. You have your BVN, your account number, your email address will be your username. It's quite seamless. And we normally ask for your KYC document, which is know your customer. You must have your valid means of ID, preferably your NIN slip, your passport photograph, your proof of address, preferably not Loma slip or water bill. And you can also give us your signature specimen, like signing twice on a plain sheet of paper so that we can vet your signature at the point you want to liquidate. If you have any other challenges at the point of onboarding, you can actually reach me or visit our website. Thank you.
All right, thank you so much, Inka. I also have the barcode of the QR code up that you can use to scan and go straight to AXA Mansard website. All right, let me see if there are any other questions. Okay, Mary Rose says, what's the difference between implied yield and expected yield on a commercial paper investment? I don't know
Okay.
which of our speakers wants to take that. Okay, please go ahead, Inka.
So implied yield. So when they issue a commercial paper, especially a corporate firm, they put the implied yield there, and that implied yield is inclusive of the tax, which is 10% of the implied yield. Then, as a company, we charge a fee, which our fee on any investment is 1.4% of the accrued interest. So let's assume that the implied is 25%. Now, 10% of 25% will be 2.5. If you deduct 2.5 from 25%, that brings us to about 23.5. Now, that 23.5, take out 1.4% management fee, that brings us to about 22.1, correct me if I'm wrong, and that would be your net yield to you. So you get a 20.1% on, let's say you've invested 10 million naira, so you get 20.1% on 10 million naira for the period we've embarked on the investment. That is, let's say from January for 180 days. So that'll be 180 over 365 times 10 million naira times 22.1. So for transparency's sake and for integrity, we normally state it there, we break it down so that you can see what are the fees. But some don't do that. But for AXA Mansard, we do the breakdown for more detailed explanation. Thank you very much.
All right, thanks, Yinka. There's a question here that says, I have a mutual fund with AXA Mansard. This is from Esther Ayoshola. I have a mutual funds account from AXA Mansard and have taken funds from money market to subscribe to commercial papers based on AXA's advice. However, CP yield did not match the rates as advised. Ooh, okay. How does this yield rate work? Is it annual?
Yes, it's annual. The yield is annual. Then to be prorated based on the number of days the counterpart is issuing the commercial paper. Like I said earlier, if it's for 180 days, that will be 180 over 365 times the implied yield times your capital.
Okay. Okay. Hello, I'm a recent graduate. This is for Tomisi. Hello, I'm a recent graduate and I want to build wealth gradually. What is the channel I can use among what is the channel I can use among ARM's products to get satisfactory interest rates? Yinka, I don't know if you know anything about ARM's products, but
ARM is my now about competitors. So why you take the funds to ARM? We are willing to walk you down and walk you through onboarding yourself. So you can actually get my number, and Yemsi, I don't mind if you can drop my number on the group chat so that people can reach out so that I can guide them as much as I can. AXA Mansard offer the same products as well. So I'm not trying to be biased. You can have you can diversify your fund into various investment houses like AXA, like Stanbic, like ARM. So that's my answer to you, Tomisi.
all right, thanks. Some we have anonymous attendee. Okay, she says, please, do you have property fund?
Do we have property fund? Not for now.
Okay. There's another question that says, for the various fund plans, how quickly can one check the fund that is performing best, giving the highest ROI?
Depends on the capital you want, your initial investments. We need to know what you are starting with, then we can advise accordingly. If you're saying you have 1 million and I want to go into federal government bond, that is not viable. Are you getting me? So we need to look at what you are starting with and we'll guide you accordingly.
Okay. Esther has another question. She says, please take the process of transferring funds from money market to fixed income again.
Yes, here I lost it for a moment. I didn't get your question.
So the question says, please take the process of transferring funds from money market to fixed income again.
Okay, good. So having built your fund in the money market space, let's say you started saving last year, you were consistent with the sum of 200,000 last year, we were able to increase your savings to about 500,000. And now in March, you've saved up to 5 million naira in your money market. You can give us an instruction when we show you the product that we have, or we have this with Baobab. Baobab is offering 20.6% for a period of 90 days with a minimum amount of 5 million naira. Now we have commercial paper. Daraju is offering 10, 20, 21% for 180 days. So when we give you those options, then you give us the go ahead. Or can it take this as an instruction to take out the sum of 5 million naira from the money market and invest it in so and so based on your discretion? Then we will follow suit. Once you close the transaction, we issue an investment certificate. If you have more than that, we give you a portfolio summary of all what you have done. Maybe you did a little bit of treasury bill, a little bit of fixed deposit, a little bit of commercial paper. We give you your portfolio summary that this is what you have as of today. I hope that answered your question.
Okay. All right, there's another question that says, can I invest in series 1 and 2? I'm referring to commercial papers. That's from Trisha.
Okay, I'm sure you must have gotten the communication on FSDH. Yes, it depends on, you can invest in series 1 and 2. The series 1 is a period of 90 days. I think the series 2 is of 151 days. So if you want to invest, if you meet up with the minimum amount, which is 5 million, then you can subscribe online. We've made it quite easy and seamless. Once you have that email communication from Mansard Investment Limited, once you click on the link, so far you have funds in the money market, you subscribe to it, it will automatically pick your name that you are shown interest. Then we spool at the end of the day. So by the way, it's closing on Monday. I know Monday is a public holiday, but we shorten it down by end of day on Monday for those that want to subscribe to the FSDH commercial paper. Thank you.
Thanks, Inka. There's a question here that says, can you share the full calculation of getting the net yield for commercial papers? Also share details on the ongoing Daraju CP.
Okay, I know my senior colleague Toyin is on this call. I don't know if she can help me get the comms on that so that she can let me put it here. Hold on a second.
But the Daraju, are you talking about the Daraju CP?
No, I'm speaking to the FSDH. Daraju is currently not available. It's FSDH that is available as I speak.
Okay.
So we can actually put the link so that people can just then if you are not if you don't have an account with us, they know how you'll be able to subscribe. But for you to onboard right away, you can just visit our website. And for those that can reach out to me, there's a link I can share with you on WhatsApp that can make it quite seamless for you to onboard yourself immediately today and make your reservations for the commercial paper. For those that are unable to conclude their account opening, I'll drop my email address. YMC, you could help drop my email address onlineka.oyeku@axamasa.com and ibukunluwagoriola@axamasa.com so that we can take note of your orders against Monday. Although I know it's a public holiday, but we'll take our time to work it out to check for clients that are subscribing offline.
Okay, thank you. There's a question here that says, currently between money markets and commercial papers, which one has the highest rate of return?
Commercial paper does for I'll say commercial paper because we don't know what the rate is going to be in the next few years. You know, it depends on the markets and the methodology the federal government are using. But if you've locked your funds with, let's say, this FSDH now that is offering about 19.8% for 151 days, assuming in the next 2 weeks, the rate drops down to 15%. So those that have locked their funds in FSDH they've edged against that their currency because they've locked it for that period. However, it can be the other way around. But with the way the economy is, the inflation rate now has been dropped down to about 23%. Hopefully, the food inflation will reduce and everything will normalize in Nigeria. But we don't know the metrics our government are going to make use of. However, putting in the money markets is still edging against currency loss, depreciation. Same goes to the commercial paper. By the way, I will encourage you diversifying into this. A little bit in the money market, a little bit in the commercial paper, a little bit in dollar, just like what Ibi has said earlier. Put it in various risk buckets and understand your risk appetite. Thank you very much.
All right. Thank you. There's one comment that says that the slides be shared. We're working on the video is being recorded. This webinar is being recorded, so the video will be shared. And the link can be shared to everyone. Yeah, I think that's the last comment I can see now. That's the last comment that we have. So I think maybe we can wait a moment or two if there are still comments. I think there's one more comment now. Just give me a moment to check. Okay, someone says I'm trying to buy funds through the AXA Mansard app, but it's saying an account already exists. I'm kind of stuck. Okay, I think what you can do, I would drop an email address now that that you can send an email to, so that it can help you for that. The customer service team that can help you for that.
Okay, to have that, you can also drop my email address doing and ibukolo@axamasa.com.
All right, done that. Okay. Response from Miss Ibru. I'm sorry. A says she's still waiting for the response from Miss Ibru. Could you please type your message so that she can just take a question once and for all?
Okay. I can actually respond now.
Okay, you have the question.
Yes. So hi, Miss A. So again, my disclaimer is please invest at your own risk. But the real estate investment trust, a really good one is the UPDC one. So UPDC Real Estate Investment Trust. There's also SFS Real Estate Investment Trust. So that's SFS. And then Union Homes Real Estate Investment Trust. But personally, I recommend. Oh, I don't know. Okay, personally, I recommend the UPDC.
Okay, thank you, Binka. There's a question that says, is the account opening for minors now working? I was informed it was down. Inka, do you have an answer for that?
Yes, it was down. We are working on a better refined product to address that. Hopefully very soon we're going to kickstart on it. So sorry for the delay. However, we can still, if the children are within 18 years, they can deal on their own. We can also put in their funds in a sub account. If those children have their own BVN, we can do that. Also, we can also take it offline. The person can actually reach out to me. Thank you.
Okay. All right. Thank you, Inka. Okay, so I don't see any other questions coming in. So I would quickly just let the head of wealth sales at Mansard Investments give a quick closing remark, and then yeah, we can end the webinar. Tony, are you there, please?
Yes, I am. Thank you, MEC. Good afternoon, and thank you, beautiful ladies, for joining us. It's been an awesome time. Thank you, Binka Ibru. Your session was enlightening. And then thank you, Vivasha Solainka, for all the nuggets shared. And for everybody who asked questions, I hope that we got to answer you. And as said, there are emails that you can reach out to, and there are phone numbers that you can reach out to. And so there's a Chinese proverb that says the best time to plant a tree was 20 years ago, and the next best time is now. Now is the time to start your savings. Now is the time to start your investment, and you're never too old to start. The greatest risk is not taking a risk at all. So take your fears aside and let's start now. Let's do this together. I look forward to having all of you on board here at AXA Mansard Investment, and I assure you of excellent services at every time. Thank you once again for joining us. It's still our month. It's still the month celebrating the women, and I celebrate all of you. Thank you once again for joining in this webinar. Have an awesome, awesome weekend. Thank you.